Welcome into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates. Securities offered through Peak Brokerage Services, LLC. Advisory services offered through the Retirement Guys Formula, registered investment advisor. America's Retirement Headquarters, America's Medicare Associates, and the Retirement Guys Formula are separate and independent entities from Peak Brokerage Services, LLC. Welcome to, and thanks so much for joining us here on America's Retirement Headquarters, the home of the Retirement Guys Formula at America's Medicare Associates with Nolan Baker and Scott Kirshner. And myself, my name is Chris Swan. 419-794-3030 is the phone number. Once again, that's 419-794-3030. Online, arhq.com. Today on the show, understanding Medicare when you turn 65, 3 ways to reduce Social Security taxes, and 4 ways to reduce healthcare costs in 2025. All this and more, but first, before we dive in, you did not hear me incorrectly. Pleased to be joined by Nolan Baker and Scott Kirshner. Is that right, Scott? Nolan, yes. Glad to be with you guys. How you doing today?
We're doing great. You know, I gave Scott a little bit of breathing room there with the annual enrollment period. I know we had so many wonderful clients that we got together with, talked about their Medicare coverage, talked about what the renewal changes are, you know, for 2025, and I think you were running kind of back-to-back meetings for quite some time.
Oh boy, it was an incredible 2024, 2025 AEP. Troy really stepped up. We actually brought in a new guy. Dan Trombley's with us now, and I want to give a shout out to him. He's been in the business for 25 years, so that's taken AMA up to nearly 60 years of experience between the three of us. And I literally was here, at 7:30 in the morning, and I would get home at 8:30. So from October through Christmas time, my wife didn't see me much, and she always had a smile on her face, and I was like, I don't know if that's a good thing or a bad thing, right?
Chris, we don't really let him slow down. So in between that, I've been enjoying my son play some hockey and having a good time going to those games. But today we're going to be talking also about some of the things that are still important deadlines with Medicare, the open enrollment period. So those of you that are age 65 or older and you're on a Medicare Advantage plan, you want to make sure you tune in and stay tuned today. We're also going to be talking about, for those of you that are celebrating a great birthday, turning 65 today, we've got a lot of great topics. So many great things that we're going to be talking about today.
Absolutely, a lot of great things. Let's go ahead and dive into it, actually. The second Trump administration, it is here, and the new president tells NBC News one of his top priorities is a campaign promise that carries, right now, it's got a deadline at the end of the year.
We're going to be extending as soon as we can the Trump tax cuts, because they're coming due and they're very substantial for people, and it would be I think it will anger a lot of people, frankly, if we don't get an extension of that. That's what led us to one of the greatest economies ever.
Now, we all know that promises on the campaign trail sometimes have a little bit of difficulty crossing the finishing line. An article that I read on Morningstar said it remains to be seen if all these cuts will be extended because, Congress does have to find a way to pay for them. So nothing's set in stone yet. We do know the intentions. But what are 3 tips to take advantage of the historically low tax rates as they stand now so that we can try to pay less either this year or in the years to come?
I think that's the important thing, is understanding what is the tax law for 2025 and making sure that you're applying it to your situation. For many of you that have been listening on the show, that we talk about the How to Retire show here on America's Retirement Headquarters and, give you advice regarding our team approach. And with our team approach, we talk about taxes, estate planning, asset protection, and money management. And here at America's Retirement Headquarters, we have one location to take care of your entire retirement. And what's interesting now that we have the ability to do is under the T section, taxes, is we have retirement tax partners have joined our office location here at America's Retirement Headquarters. So we have the ability to file your federal, state, and local taxes, but not just recording what happened last year, 2024, in history. We also have the ability where we can provide you a what-if analysis that talks about here's things that you can do specifically in your situation to try to reduce and eliminate as much taxes as you can pay. And that's something, if you're a listener of the show, we have a promotion going on with Retirement Tax Partners. We'll prepare your 2024 taxes and we'll do it for 50% less than what you paid last year. So a nice value add for you being a listener of the show. But let me give you 3 tips for 2025 that you can take and put into your situation on things that we've looked at. Number 1 is using tax advantage investments. An example there is maybe considering the asset allocation that you have in your current portfolio. We had talked about on the show for quite some time about some of the risk that were apparent in bonds when interest rates were historically low. Now interest rates have come back up quite a bit, increasing quite a bit of the yields on some of the bond funds that are out there. But there are advantages that you can get tax-wise by considering municipal bonds. And so here's what we've seen happen is we've seen the higher interest money market accounts have started to come down. Bonds historically go up in price when interest rates go down. It doesn't guarantee that's what's going to happen, but there could be some opportunities to look to increase your yield, increase some opportunities, as well as get some tax benefits by considering using some tax advantage investments. Municipal bonds are just one example of that. Number 2 is considering delaying Social Security if you're not collecting Social Security benefits yet. A common approach is that a lot of people will begin collecting Social Security either at the age of 62 or right when they retire. And for many folks, full retirement age is somewhere in the age of 66 or 67, depending upon the year that you were born. Collecting Social Security earlier, what happens is that income gets added on to your additional income sources, whether it's work or whether it is income you're taking from your 401k or IRA, and then your Social Security benefits can become taxable. Yet if you delay Social Security either to your full retirement age or you could delay until age 70, what happens is you get an automatic increase by delaying benefits. And the fact is that only up to 85% of your Social Security benefits can be taxable. It could be a tax advantage strategy to delay taking Social Security to later in life. You get more, and it's, again, not all taxable. It's only 85% taxable. And Scott, if you take money out of a traditional retirement account, like a 401k or a traditional IRA, what percentage of that income is taxable?
Traditional, 100%.
100%. So if you're looking at taxes, is it better to pay taxes on only 85% or 100%?
Better. Absolutely, yeah.
So if you're not collecting Social Security, and you want to look at an optimization report, you want to look at some strategies and figure out how does it apply to your situation. Again, that's something not only can we do the optimization report, in that tax what-if analysis, we can take a look at, what could be your best approach on when to draw Social Security. The third 2025 tax tip is to make health savings account contributions. Now, Scott, for those people that are listening, kind of walk us through a little bit about, what are the abilities, what are the options, what are the benefits, and what are the, tax tips for health savings accounts?
Well, no, I'm a huge fan of the HSAs, the health savings accounts. These are different than the FSAs, which are the flexible spending accounts. Totally different animal, totally different concept. So an HSA is basically a health savings account where you contribute or your employer contributes into a savings account for you. The numbers for 2025 for an individual, you can contribute up to $4,300. If you're over 55 years old, you get an additional $1,000 catch-up. So you could conceivably put in $5,300 for an individual. Now, for a family, that number is $8,550. If you're both over 55 years old, that's an additional $2,000. Here's the beautiful thing about that. It's 100% tax deductible. So when you put the money into the HSA, that is right off the top, that is a reduction in taxable income. When you pull that money out for any health benefits, it's tax-free as well. That money is yours. And with the interest rates, I know they're starting to come down a little bit, but with the interest rates, you can invest that money in an HSA and earn some money on top of the amount that you contribute. that money stays in and rolls over year to year. You don't lose that money. So when you do become Medicare eligible, and if even down the road, you can use those funds for medically approved benefits, even moving into to Medicare. I've got a couple of clients that have in excess of $70,000 to $100,000 sitting in HSA funds. They'll never pay anything out of their pocket for health insurance benefits in Medicare.
So just again, one good example of why it's important to have everybody, your team, all in place at one table, looking at how the health insurance options can impact your taxes, looking at your investment choices as well. Again, it's right here at America's Retirement Headquarters. It's home of that one location in that retirement team action plan. And again, during this tax season time, if you are looking for getting your 2024 taxes done and you want to have that tax what-if analysis done, we're happy to do that for you, our listeners. Again, we're offering 50% off of what you paid for your 2024 taxes last year. Just call the office for details, and we'll sit down and have a conversation to see which of these tax options and or other ones make sense. Because, again, before you make any important decisions about changes, you'll want to consult with a tax professional. I'm not a tax professional. Scott's not a CPA or accountant, but that's what we have access to here at America's Retirement Headquarters with Retirement Tax Partners.
And it all begins with setting up a time to speak with the team and develop that retirement team action plan. The number to do that, 419-794-3030. Once again, 419-794-3030. If, in fact, the Trump tax cuts do get extended, it doesn't mean you made a mistake by taking advantage of the law of the land as it stands now. It just means you suddenly got more time to be more tax advantageous. So one more time, 419-794-3030 to start developing that retirement team action plan, or go to the website, arhq.com. We spoke earlier on the show about how the annual election period has come and gone. The open enrollment period is happening as it stands right now. But here's the thing, not just during the annual election period, not just open enrollment period, people turn 65 every single day of the year. And when you turn 65, you typically become eligible for Medicare and can sign up for Parts A, hospital insurance, and Part B, medical insurance. If you're already receiving Social Security benefits, you're automatically going to be enrolled in both parts starting the first day of the month you turn 65. Here's the thing, that could be very confusing. So how do you help people understand exactly what their options are?
Well, Chris, you're absolutely right. That can be very confusing for people. And what we found over the many years that I've been actually helping people with Medicare is the level of confusion that people have. It is getting better. I do see people coming in with a little more education. They do a little bit more homework, educating themselves on exactly what to do with Medicare. But it's amazing to me how many people just kind of put the blinders on and say, I don't understand this, help. And that's what we're here for. So one of the big things that we at America's Medicare Associates do is we do a lot of educational events. And, if you'd like to see what educational events we have on the calendar, if you go out to the website, americasmedicareassociates.com or arhq.com and click on the events tab, you'll be able to see what events we've got coming up and how those may be coming in your area, and you might want to attend those. But, a couple of things you mentioned, Chris, was, if you're taking Social Security, what do I have to do? What if I'm not taking Social Security? How do I sign up? Once I sign up, what do I do? These are all important things to understand. One, if you're taking Social Security, correct, you will automatically be enrolled in Medicare. That is Medicare Part A and Part B. And it is the first day of the month you turn 65, with one exception. And it's funny, I asked the people in the room in the educational events I do, how many of you have a birthday on the first day of the month? And a few of them, one, maybe two people raise your hands. And what happens with the first day of the month, your eligibility date is the month prior. So if it happens to be February 1st, then your eligibility date is January. So that's one little caveat that a lot of people don't even realize that. I'll have people show me their Medicare card and they say, well, I thought it was the first day of the month, but my birthday is in May, but my card says that it's April. So that's one thing that a lot of people have a little misunderstanding on. The other thing is, if you're working for an employer that has 20 or more employees, or your spouse has you on their health plan, you do not have to sign up for Medicare. This is another big confusing part for people. So if you're taking Social Security, you're on your spouse's employer plan, it makes no sense to sign up for Medicare and pay for an employer plan. You're going to be paying $185 for 2025 for Medicare and your employer plan. One of the things we can do is we can help you disenroll in Medicare, save that $185 a month until your spouse either retires or loses coverage at some point down the road. So, covered taking Social Security, you're automatically signed up. But what if you're not taking Social Security? Well, this is a big one. You have a couple of options. You can contact the Social Security Administration office. They'll schedule you an appointment. It's a telephone appointment, and they'll do the application right on the phone with you. Or you can create a My Social Security account. You log into that account, and you can do an online application. A couple of things that we do for people, we can assist you with those two steps right there. Those are kind of like pro bono. We do things to help our clients. It's all about you, the client. So if you need to sign up for Medicare, but you're not taking Social Security, you need to come see us, and we can help you go through that process and get signed up. Once you are actually signed up for Medicare, you get your red, white, blue Medicare card. You've got Part A, Part B. That's where I refer to as the magic happening. That's where you come in, you sit down with us, and we go through your specific needs, and we find a plan that's going to best fit your needs to help you get coverage for what Medicare doesn't cover, because Medicare doesn't cover everything. You know, there are out-of-pocket expenses. It's an 80-20 plan on the Part B portion of it. And we can put a plan in place for you that's going to help you cover what Medicare doesn't cover. So you've got no out-of-pocket expenses that are going to, as we so-called say, break the bank if you aren't on the proper plan. If you are turning 65 in 2025 and you want to know more about how we can help you, reach out to us, either contact the office. Our direct line at AMA is 419-794-3053, or you can reach out on the website, americasmedicareassociates.com, or once again, arhq.com. That number is shown there on the screen, or a website is on the screen. So reach out to us, and we're happy to help you in any way and answer any questions you might have.
Hey, you know, one of the great things I think about it too, Scott, is if you look at it and you're thinking about the different choices, if you're turning 65, you know, one of the great things about America's Medicare Associates is this is no cost to you ever.
Right.
You know, so whether you decide to spend all of the time, effort, and energy going on the internet researching things, I know you've probably been bombarded by letters and postcards coming in to the mail with you with looking at different choices. The compensation that America's Medicare Associates gets is directly from the insurance carriers, not from you. Your premiums are standardized, so you will never pay more. Number two is independent and unbiased. You know, unlike captive agents, America's Medicare Associates is not tied to any one insurance company. That means they have the ability to offer you unbiased advice and compare multiple different options to find what could be the best fit for your individual needs and situations. You talk about experience that you can trust. Mm-hmm. You know, born and raised here in Northwest Ohio, a Waterville native, but we have three people on the team, and that combined experience is over 60 years of dedicated experience to be your go-to resource to help you with your entire retirement, developing that asset protection plan for your healthcare needs and support you with every step along the way. Instead of having to call an 800 number and tell somebody the story over and over again, or trying to track down somebody who's a quick salesman on Medicare, you have one location right here that you could come to the office, sit down when you have those questions, get that experience that can help navigate what's oftentimes a very confusing environment and helping you pick the right type of plan for your situation, offering, again, that ongoing support and education, whether it's going to our YouTube channel there at America's Retirement Headquarters, or going to arhq.com, signing up for one of our upcoming Medicare seminars. We've got some dates coming up where we're going to be talking about turning 65. But even in that situation, if you want to jump to the front of the line, we are just a phone call away and can help answer any questions and get you in control of your health care as you turn 65 and moving forward.
It's not just about your physical health in retirement. It's not just about your fiscal health in retirement. It's a combination, and making sure you've got a comprehensive plan that takes care of both of them can go a long way to addressing so many concerns that people have, especially concerns about the unknown. Let the team at America's Retirement Headquarters help make sense of all that, help educate you. Go to arhq.com, click on the events tab to find out about those upcoming workshops and events that they've got going on. Find one that works for you. Or, as Nolan pointed out there, it's got, if you want to jump the line and get in front of them and set up a time to speak with them, just reach out, give a call, 419-794-3030. Now, as I'm sure our listeners and viewers are aware, Social Security is a cornerstone of income for millions of retirees, but often people are shocked to find out the money they've paid taxes on during the working years, well, guess what? It can get taxed again in retirement. Nolan, as you mentioned previously, up to 85% of a retiree's Social Security income can be taxable. Is there a way, or what are three ways actually to help reduce or eliminate this tax?
There definitely are three ways to reduce Social Security taxes. If you look at it, what happens is you have what is called provisional income. So whether you're a single or a married couple, part of your income becomes 50% taxable for Social Security benefits, and it can go as high as 85%. Dependent upon what is considered your countable income. And if we think about countable income, that would be things like work income, income that you earn from, taxable dividends and interest. It could be withdrawals on money that you take from your 401k or your IRA, and also half of what your Social Security income is. They put that all together to figure out this formula on how much they can tax you on money that, well, quite frankly, you already paid taxes into. And it is a shock, I think, for many retirees to find out how much they can ultimately pay in the form of Social Security taxes. So this is one of those areas that proactive planning can really help you. And, in the team approach, when we're looking at things like reducing taxes, with the team approach, looking at taxes, estate planning, asset protection, and money management, again, with our relationship with Retirement Tax Partners, we can run a Social Security optimization report, and we can look at different ways and give you specific ideas on when might be your best approach on drawing Social Security. But the three ways to reduce Social Security taxes is, number one, consider delaying benefits. And in the earlier years, you could do Roth conversions. So one of the advantage of a Roth conversion is if you follow the rules of, how Roth is set up, meaning that you've had it for more than 5 years and you're 59 and a half, you begin to take withdrawals from that account. The Roth is not going to be considered in the calculation to determine whether your Social Security is taxable. So a common approach will be people will begin to draw Social Security benefits right when they retire. But by doing that and then taking money out of their 401k or IRA to supplement their income, that combined income is what oftentimes will be one of the ways that creates this Social Security tax problem. If instead in the early years you did Roth conversions, by delaying Social Security, one, you're going to get a higher benefit by delaying Social Security. And two, because of that higher benefit later in life, you then also, if you have these Roth accounts, have the ability to have more control on what's considered taxable income in the future. So again, number one, delay benefits and do Roth conversions. Number two is you want to minimize the taxable income that's reported on your tax return. So as I pointed out before, when they're looking at how much they can tax you on your Social Security, they're adding in things like the amount of dividends and interest and, capital gains that you have. A way to consider reducing those amounts, because I love income sources, right? Everybody loves capital gains, but it comes down to what's called asset location. So you might want to have more of your dividends and income generated in your tax deferred retirement accounts, like your 401k, your IRA, or your Roth IRA, because that doesn't show up, again, depending upon how you take withdrawals out of the account. And, have more of, say, your growth oriented investments that you can control when those investments are sold, Or also consider things like municipal bonds would be an example to help minimize some of the countable taxable income that you have. Number 3 is to use qualified charitable distributions. There's a lot of people that we work with that love helping support either their church, a charity, or a cause that's important to them. And what oftentimes we see is people over the age 70 and a half will take money out of their retirement account, it goes in their bank account, meaning that it's fully taxable, and included in that formula to determine the taxation that you pay on your Social Security benefit. They then, in turn, will write a check to their church or charity, making that donation. And I think that's fantastic that they're supporting an organization or cause that's important to them. But understanding that qualified charitable distributions give you the ability, if you follow the rules, where you can take that distribution and you can donate it directly to the charity. The advantage of doing that is now the charity is going to be able to get it. They're not going to have to pay taxes on it. Number 2, it's going to help solve some of your what's called required minimum distributions if you're subject to required minimum distributions. And number 3, it's going to keep that income off of your federal tax return, potentially reducing your Social Security taxes. So again, 3 ways to reduce your Social Security taxes. And if you want to find out more, again, we can run the Social Security Optimization Report, and we can also pull in our relationship with retirement tax partners to give you a specific what-if analysis that could help you determine how to keep more of your hard-earned money.
Figure out how it all works together, because if you neglect one or the other, it could certainly work against you, and I don't think anybody wants that in retirement. Set up a time to speak with the team at America's Retirement Headquarters. Start developing that plan to make sure you get to keep as much of your hard-earned money as possible. 419-794-3030 is the phone number. That's 419-794-3030. Or you can also get that Social Security Optimization Report by reaching out at arhq.com. Tis the season means something a little different after the holidays. Right now it means, well, in just a couple of weeks, some tax filers are going to find out that they have to end up paying a higher premium for Medicare, and others may end up losing some or all of their tax credit. Higher income levels can trigger Medicare premium surcharges under the Income-Related Monthly Adjustment Amount, also known as IRMA. And since the Affordable Health Care Act is based upon income, well, let's talk about this. How do we reduce that? What are 4 ways to lower healthcare costs in 2025?
Well, boy, this is a good one. One of the things we've talked about the Medicare, and the annual enrollment period is October 15th through December 7th. Well, on the proverbial Unaffordable Care Act, that actually starts November 1st and runs through December 15th. So I'm going to go through, Nolan and I are going to go through actually 4 different key points, and we're going to talk a little bit about how to pay attention to what you currently have, and how we can try to reduce some of your costs for 2025 for healthcare, whether it's Medicare or whether it's the marketplace plans. First and foremost, you want to make sure that you do, if you haven't already, make sure you do a review of your current plan. With the marketplace, you need to go in. You don't have to do this at the open enrollment period for the marketplace, but you should definitely go in, log into your account, and update your application. What this is going to do is even if nothing changed, what it's going to do is it's going to give you the new premium tax credit amounts that are available to you. One of the things that happens with the marketplace is, and don't shoot the messenger, we're dealing with the government here, okay? One of the things that happened is they increased the subsidy amounts. And here's what I mean by that. If, let's say, for example, you were reporting $50,000 of annual income, in 2024, that $50,000 may have generated, and I'm picking a number out of the air, $500 tax credit. That same $50,000 income in 2025 may generate $625 tax credit. So if you do not go in and update your application, you won't be able to take advantage of the $125 increase subsidy. Now, the other thing that happened was they actually lowered the maximum out-of-pockets. not by a whole lot, but they lowered the maximum out of pockets. In turn, they also increased the premiums. So for the marketplace, update your application, make sure that you're taking advantage of the premium tax credits, and see how that coverage is actually going to work for you moving forward. There are roughly, in our area, Northwest Ohio area, there are roughly 102 different plans available. So you want to make sure that you go in and shop appropriately for that. One of the things that I do and our team at America's Medicare Associates will do for you is we eliminate 100 of those 102, and we'll focus on a couple of plans that are going to be best for you. So that's one thing. Understanding your coverage. This is a big one. A lot of people don't truly understand exactly what their coverages are and how to use them. Let me give you a perfect example. If you have, let's say, a rash of some sort, you don't necessarily have to go to the emergency room for that. A lot of people use the emergency room as their primary care. Well, you got to remember, you've got a copay for emergency room. And if you're on a plan that's got a higher copay for emergency room than it does for the urgent care, you might want to consider going to an urgent care facility and taking advantage of that lower copay for something minor. You know, if you've got a minor cut or a cold that you just can't get rid of, things of that nature, you might want to reevaluate where to go seek treatment and see what's going to be best for you there. So those are a couple of things. Nolan, number 3 on our list is plan large withdrawals from retirement accounts with a tax what-if analysis. Why don't you talk about that for a second?
Yeah, again, a really good idea to understand how one thing can impact the other. So, the decisions on taking withdrawals from retirement accounts could impact your health insurance cost. It could impact your Medicare premium. It could impact the taxes that you pay on Social Security. So it's one of those snowball effects that really catches people off guard. A common thing that we will talk to people about is the goal of being debt-free. If I think about my clients in retirement time, I would say the ones that I know that are out there living their best lives ever, one of the consistent themes is, they're debt-free. So if you have a mortgage, a common thing that people will think about is, hey, maybe I want to pull a lot of money out of my retirement account and pay my mortgage off. I can think of some people that came into our office. They had already made that decision before meeting with us, and they came in and they found out that large withdrawal created that Medicare excess premium tax, costing them a lot on their healthcare expenses. When we're doing the tax what-if analysis, I generally agree that being debt-free is a good idea. But what they might have wanted to do was, say, stretch out the withdrawal over 2 years or over 3 years.
Right.
So it could have been a lot better financially for them had they taken, let's say, half of the withdrawals last year and then half of the withdrawals now this year. And that could have been a great way to help lower their health care costs in 2025. We also have people that will want to take large withdrawals for things like a client in particular that I can think of. They're taking a 3-month cruise around the world. Mm-hmm. I mean, what a wonderful lifetime trip. And, whether it's a Viking River cruise around the world, whether it's that dream car that you wanted, maybe a vacation or something else that you wanted, it may be more beneficial to consider how those large withdrawals are taken, again, by having that what-if analysis, because that income gets stacked on that year's tax return, could push you not only into a higher tax bracket, but could negatively impact the cost that you're paying for healthcare as well.
Yeah, absolutely. And that's one of the things on number 4 is watch your accountable income levels. What we do, and one of the things that is so great about our relationship is many years ago, I would say, let's see, the kids are, gosh, they've grown. They're 21 and 22 now, right? When our 2 kids were in Taekwondo together, we sat and struck up a conversation. And, hey, Nolan, what do you do? And he says, I'm a financial planner. I help people through retirement. I go, well, that's funny. I'm in insurance myself. And we just hit it off. And one of the things that allows us to really work well together is you'll come to me with a client's needs and said, where do we need to be for their reportable income? So I'll run an analysis for their health care and say, this is what looks good at this income level. Here's where we might need to get them. So one of the things that you're able to do is maybe take some money out of Roth IRAs to supplement some of that income, because Roth IRAs are not reportable income when it comes to health care premiums. So make sure that we do our best to try to lower your reportable income. Now, that's your reportable income to take advantage of the premium tax credits. One more thing I'll add before we end this topic here is one way to kind of monitor and cut some of your cost is your prescriptions. A lot of people get their prescriptions filled on a month-to-month basis. Well, if you do a 90-day supply and even consider maybe possibly mail ordering those, that's another way to save, because typically what happens is a 90-day supply is going to save you a full month worth of co-pays for those medications. So if you want to know how can I save on my healthcare costs for 2025, give us a call, reach out to us, visit our website. We've talked about helping people navigate and move through their insurance premiums and cut costs as much as possible for 25. We can help you do that.
I think it goes without saying, less money that you're spending on copays and doctor's visits and your premiums is more money you get to enjoy for yourself and utilize for whatever it is that you want to do. It's all part of the planning process, and you can figure out how it all works together by giving a call, 419-794-3030, or visit them on the website, and that is at arhq.com. There are billions of dollars each year that are donated to churches and charities. For retirees who want to donate, is there a better way than just opening up the checkbook and writing out a check?
Well, I would say, first and foremost, I think it's fantastic that so many people are able to help churches and charities, either here in Northwest Ohio, around the U.S., or even around the world. I mean, it's the donors like you, I think, that make the big difference and make things so possible with what we're able to do to help nonprofits. But when you're looking at making donations and you're a retiree, there's two big donation mistakes for retirees to watch out for. Number one is, taking money out of a retirement account once you're over the age 70 and a half, letting it become taxable income for you, paying taxes on that money, and then writing out a physical check to the church or the charity. You need to know about qualified charitable donations. And the advantage of qualified charitable donations is you can take money out of a retirement account if you meet the criteria, essentially over the age 70 and a half, and donate that money directly to the charitable cause. And by doing so, instead of it being taxable, and instead of getting only 80 cents on the dollar, 100% of that can go directly to the charity that you choose. It also is going to keep that income off of your tax return, potentially saving you money on taxes, saving you what could be excess Medicare costs, saving you potentially Social Security. So number one, qualified charitable donations, not missing out on that opportunity. Number two, estate planning mistakes. We oftentimes will meet with folks and people will talk about, hey, in my will, I wanted to leave some money to this particular charity. I remember meeting with a couple and, the wife had passed away and then ultimately the husband had passed away, and, looking at their overall estate plans, and I'm not an attorney, but I was involved on the financial aspect. I noticed, in their will that they wanted to leave some money to a charity of their choice. Again, fantastic. Love it. I think it's a great idea. But what they didn't realize is that by putting the charity in the will versus having the charity as a named beneficiary on a retirement account makes a big, big difference. Meaning that on a retirement account, if you name the charity as part or all of the account as the beneficiary, the charity can get that money and not pay taxes. If you take your retirement account and let's say you name either your will or you don't have a beneficiary or you name your children, that income becomes taxable to the estate or the beneficiary if it's an individual. So then if the estate gets the money, they've lost that money in the form of taxes, and that money could have gone directly to the charity without having to pay those taxes had they set it up correctly and then looked at naming a beneficiary in their retirement account versus naming a beneficiary on there. Well, it's just one of the things that we talk about when we go through the ultimate estate planning checklist is making sure that we're looking at what those wishes are. So if you're charitable minded and you're donating to charity and you want to find out, are you doing it? And, what could be the most efficient way, whether it's taxes or estate planning, those are answers that we can give you here at America's Retirement Headquarters. Again, walk you through that retirement team action plan, help you make a bigger impact on those organizations that are important to you.
You get to help out those that you care about as far as the charities and causes, and they get more of it, and Uncle Sam gets less of it. I think it's a win-win all around, except for the government, but I think no one's really going to complain about that. It's all part of that planning process, and to figure out how it all works for you, just go to the website, set up a time to speak with the team at America's Retirement Headquarters to be as tax efficient as possible. ARHQ.com is the website. You can also give a call and set up a time, 419-794-3030. Currently, we are in the open enrollment period for Medicare. So that is different from the annual election period, but let's take a deeper dive, Scott. What is the open enrollment period? Who should be paying attention? What are the deadlines? Furthermore, I'm going to just add on a lot of questions here. For listeners that are 65 or older and on a Medicare Advantage plan, what are the key points of open enrollment they should pay attention to here in 2025?
Well, Chris, you hit it right on the head with that one. We are absolutely at the beginning part of the open enrollment period. This period starts January 1st and runs through March 31st. So all of you listeners out there, if you signed up for a Medicare Advantage plan, now this is important to understand, a Medicare Advantage plan, now is the time to make sure that that is still the right plan and the plan that you want. Here's what I mean by that. Point number one, the period is January 1st through March 31st. If you get one free do-over during this period. So if you wrote a plan in AEP coming from one plan and change to another plan, you can make a change. For those of you that were inundated with your phone calls from the TV, the Jimmy Walkers and the Joe Namaths, the Joe Theismanns, all of those people that were advertising, if you signed up for a plan, you do not have an advisor. You signed directly up with a company. If that's not your wishes, now's the time to do that one free change or that do-over. We can help you with that. We can analyze your plan, review it, make sure that the plan that you're on is right for you. If it's not, now's the time to make that change. For example, if we change your plan now in January, it becomes effective February. If we make the change in February, it becomes March, and then March becomes April effective dates. Okay? I've had a couple of people that have found out that their plan changed. The medications that they were on, when they went to get them filled already, we're only 3 weeks into January. The medications weren't what they thought. Their medication changed. The plan doesn't cover it the way they thought it was going to cover, so we're changing their plan. This is important for you to understand. You can make a change. Don't think that you can or you're locked into that plan because you chose it during the annual enrollment period. You do get the opportunity to make that change. So anybody that's on an Advantage plan, regardless of where you purchase that plan from, you can make a change. If you're experiencing any kind of problems with your medications, your doctors, your facilities. I've had a couple of people that are looking at skilled nursing facilities, and the plan that they're on doesn't cover them. The unfortunate thing is they purchased a plan and they didn't purchase it from us. They purchased it from one of the 800 numbers. They didn't go through all of their doctors, so they didn't know that a skilled nursing facility in this area wasn't going to be covered on their plan. One of the things we do is we go through all of that in detail with you. We show you every single skilled nursing facility, doctor's office, hospitals. So if you chose a plan off of that 800 number and you're not comfortable with it, still confused, you want a review of that plan, we can help you with that. You do get the opportunity to make that change. I know I've said this several times, but it's important to understand you're not locked into that plan. we have until March 31st to make a change. We here at America's Medicare Associates, we do everything for you and make sure that it's best for you. So let us help you review that plan one last time. One of the many things that we offer here is when we sign you up for a plan, we have what's called a Get Connected. We'll bring you back into our office and we'll create your online account so you can look for yourself and see if a doctor is covered under your plan or how a medication would be covered. Is there a skilled nursing facility in your area? How much am I going to pay for lab work or an x-ray? All of these things are on your online portal, which we help you set up. We go through one last time and verify you understand all of your benefits. A big thing that people are asking about is, tell me again how the over-the-counter works. The over-the-counter, that's the items that you're paying for today. These are items that are covered under these Advantage plans at certain dollar amounts, like your aspirins, your vitamins, your Advil, Tylenol, Band-Aids, toothbrush. I'm shocked at the number of people that have these plans, and when I review their plan at the end of the year during the annual enrollment, I say, how's the plan working? Did you utilize your over-the-counter? Oh, I forgot I had that. This is money you're leaving on the table, folks. You can utilize these benefits, and if you're confused about what the benefits are, now is the time to get together with us and go through those benefits. If you attended one of our events and for whatever reason weren't able to schedule an appointment, but you would like to schedule an appointment now, we can still help you and from now until March 31st, and we can review your plan. And if it's the best plan for you, we're going to tell you you're all set right where you're at. That's the best option. If not, we'll help you make a move that's going to help you through 2025.
Well, Scott, you know what I really like about it there is, number one is this is no cost to have this
No
review.
cost at all.
No cost ever. So America's Medicare Associates never charges a fee. Their compensation comes directly from the insurance companies, not ever you. Plus, your premiums are going to be standardized, so you're never going to pay more. And the challenge is they could end up paying more, meaning that if they're on the wrong plan,
Right.
and you're 65 or older on a Medicare Advantage plan, and as the example that you talked about, maybe they, called one of those commercials that were on, running nonstop.
Sure.
And they switched plans, but they didn't know about the market here in, say, Northwest Ohio or the market in other offices and, the specific details of that marketplace. And they missed their opportunity during this open enrollment period. They could find out later on that some of the things that they thought were covered were not covered and actually end up with a lot more cost. So, for no cost ever to you, you get an opportunity. So if you switched your plan last year, or if maybe you've just set it and forget it, that's good for the rotisserie chicken when you're doing that around Thanksgiving or Christmas time. But set it and forget it is not what you do with your health care. If you haven't had it reviewed and you're 65 or older, this would be the time frame to do that as well before something comes up. You get that independent, unbiased advice. As America's Medicare Associates are our independent insurance company, they're not tied to just one insurance company. They're also right here in our hometown, so they know our marketplace, meaning that they have the ability to offer you that unbiased advice. Compare multiple options on what is able to maybe best fit your needs for your unique healthcare situation. And, going back to, we've talked about this before, the experience between you, Troy, and Dan, over 60 years of team experience, dedicated to being that go-to resource for your entire retirement, understanding, your healthcare needs are here to support you, even in every step along the way. And then last, following that up with that ongoing support, the education that you have as well, not only just a phone call away, whether you have questions about, did I pick the right plan last year? I haven't had my plan reviewed in several years. One of the big things that happened in 2025 was the Inflation Reduction Act.
Right.
So on the surface, it seems like a good idea, right? They've capped Medicare prescription drug prices at what, $2,000 a year?
$2,000, that's correct.
But, behind the scenes, what a lot of people didn't think about is insurance companies and prescription drug companies, they're not really in the business to lose money, at least not that I'm aware of.
No, they're not at all.
So behind the scenes, what has happened is you've seen a lot of these plans have made changes to their prescription drug coverage just because of that. So even though things are good now for you, maybe you have no healthcare issues that come up, if you miss this opportunity to review that second opinion and something happens this summer, it could be too late for you to make that change as well. Get that information on what you want to do. Get it by calling the office, sitting down, having us walk through, and Scott is in his team walking you through those different choices, what your options are. Or if you want, come out to one of our upcoming events. We've got events predominantly geared towards turning 65, but we're going to be giving you the ins and outs of Medicare, the differences between Advantage and supplemental plans. We have those events. You can register right online at arhq.com. A couple of easy ways to get a hold of us. But again, it is kind of one of those time frames, Scott, that you would say there are 3 points of open enrollment, and it's still in something important for people to pay attention to.
There's no time like the present to get that second look on your plan as you're heading into 2025. Independent, local, experienced, and able to educate you. That is true of America's Medicare Associates. It's true of the entire team at America's Retirement Headquarters. And so to get them on your side to begin that process, just set up a time to speak with them. Give a call, 419-794-3030. You can find out about the upcoming events and attend those by going to the website, arhq.com. Click on the events tab there. And as both Nolan and Scott mentioned, if you can't attend those or you just want to jump the line and set up a time to speak with them directly, one more time, that number, 419-794-3030. As always, I want to thank you for joining us here on America's Retirement Headquarters. It is the home of the Retirement Guys formula, America's Medicare Associates, and now Retirement Tax Partners. Hope you have a great week ahead of you. Hope you stay safe out there, stay warm if you can. Gentlemen, always a pleasure. As we wrap up here, I do want to leave you with a final word.
Yeah, everybody have a wonderful week. And then just remember, when you think retirement, think America's Retirement Headquarters.
America's Retirement Headquarters is located at 1700 Woodlands Drive in Maumee, Ohio. You can reach them by calling 419-794-3030 or online at americasretirementheadquarters.com. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Nolan Baker is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstance. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Nolan Baker, Ohio Insurance License Number 27787.